Hello traders, and welcome to the third video within the fourth section of the IPDATrader Private Mentorship course. And in this particular video, guys, we're going to be doing something a little bit different. What we're going to be doing is simply going through charts and using the concepts and ideas that you've learned so far to analyze a chart, create a potential buys that you may have for the day, and sort of really putting the pieces together that you understand so far, right? We're going to be looking at let me grab this. We're going to be looking at structure. We're going to be trying to identify what structure may be telling us on a specific time frame, because once again, structure is fractal, and depending on which time frame you're looking at, it may tell you a different thing, right? So we're going to be taking a look into structure. Then once we have that, we're going to partner that idea with points of interest, where we could expect potential mitigations to occur, right? If we see a structure like this, and then you can expect probably a return into this origin over here to then confirm your point of interest with the help of liquidity and the entry protocol that you've learned in this section, to then take the buys higher and continue in a given direction. So that's what we're going to be doing for now, right? We're going to start off with structure. We're going to then move into identifying points of interest. And once we have that, we can look into our points of interest whenever price hits that to confirm our potential entries. So let's actually go to the drawing board and let's get started. So traders, before we get into the actual lesson of today, just a very quick word from our sponsor today, IPDATrader. IPDATrader is a regulated broker which has been in the industry for over 14 years, which gives you a lot of confidence when it comes to executing trades, depositing money, withdrawing funds, trading funds, as they're a very well known and very respected and established broker in the industry. They allow you to trade pretty much anything you want, including forex, indices, commodities, stocks, cryptocurrencies, and they have something that not many brokers have, which is a zero commissions account for forex pairs on ECN plus accounts. So if you're interested with them, guys, you will find the link in the description below. Use the link in my description to sign up with them, as if you do, you will be eligible for a 100% matching deposit using it, which is very, very good and not many other brokers will do. So once again, massive thank you to IPDATrader for sponsoring this video, and now into today's lesson. Enjoy the video. As I just explained, we're going to be sort of putting everything together, right? Putting everything together. And for that, we're going to be following simple rules, right? We're going to start off with structure. And for that, we're going to be starting on the higher time frames, and we're going to be working our way down, trying to understand where we're structurally heading, right? We're going to be focusing on time frames such as the 2 hour, 4 hour, 1 hour, right? Because those are going to be more relevant for the particular day, but we need to keep in mind the daily, weekly, and monthly structure as well, right? We cannot forget about those. So we're going to start over here, and we're going to be working our way down into those time frames where we're going to be determining our points of interest, right? And that's what's next. Once we understand that, we're going to move on to points of interest over here that are probably going to be found within those time frames over here, or potentially lower, right? Depending on how you want to refine it. But I want to really make one thing very clear, and that is that the time frame that you use for trading, it doesn't really matter, right? Because the market is fractal and everything occurs in every time frame. So it's just a matter of putting a couple of time frames together and understanding where we're heading, right? You could use your 1 hour as your, wait, let me redraw that. You could use your 1 hour as your sort of higher time frame and look for 15-minute points of interest or 10-minute points of interest, right? You're going to need to flick through time frames to then execute on the 1 minute time frame and see what's going on over there. So Whether you want to use higher or lower time frames, that is completely independent and up to you. But what we're going to be doing is this video is starting off with the higher ones, and we're going to be creating a bias. One thing that is important as well is that you don't want to be marrying your bias by any means, right? We're not smart money. We really don't know if our bias is going to be correct. Our bias should just be there to sort of guide us through the charts. It shouldn't be something that you say, okay, this is my bias and this is the only thing I'm going to execute on. No, you need to adapt. You need to have some flexibility in the charts. So we're going to be doing that, right? POIs, as we said, we're going to be focusing mostly on those time frames for the points of interest. And for our confirmations, we're going to be using the entry protocol that you've learned in this section, right? The external and internal shift. And that's probably going to be found within the lower time frames, potentially a 1, 2, or 3 minute, right? You can see how we use each and every single time frame for different purposes, right? You don't want to be caught up just watching a 4 hour and trying to execute on a particular time frame, right? And not flicking through multiple time frames, because you really need to see how orders behave within the different time frames, hence why you need to be flicking through your charts. So that was sort of the explanation of what we're going to be doing over here. I don't know if this may be a sort of a longer video, but that's absolutely fine. So let's actually get started with the analysis for the day. So now that you understand what this video is about, let's actually move back into the charts and let's start analyzing a pair together, right? Starting from the very high time frame, moving into the lower ones. And once again, guys, I know this is hindsight, but I don't have really any other choice to show you what I want to show you if it's not using the replay tool, right? Because I cannot record a video for days where the candles are printing. That's not something that's viable. So let's focus on what we have now. What do we see over here? Well, we can clearly see that this is the monthly time frame and this is Euro USD. Great. What do we do next? Well, a tip I would give you is you shouldn't really be focusing on what's happening to your left over here, right? This is 2011. This is not going to be relevant in order for you to execute today, right? I would be really looking at the candlestick structure on the monthly time frame particularly, and again, refer to the structure video if you need it. That is explained over there, but I would really be looking at the candlestick and sort of the swing points, right? So what do I see? First thing I see over here is something like this, right? I may have a low, may have a high, this may potentially be a higher low, but once again, our rule of 4, which is discussed in the structure section, is not fulfilled over here, right? We do not have a fourth point pointing in the same direction, right? The second we trade above that high, this would be a valid bullish structure and this would be a valid expectation, right? But so far we do not have that, hence we don't have anything over here, right? If we look at the most at the candlestick structure over here, right, the recent one, I can sort of see something like this. I can see a high, I can see a low, I can see a higher high, I can see a higher low. However, we never really have another higher high. Matter of fact, we're trading below previous higher lows, so we want to see what's happening, right? Once again, we're still in the monthly, there's still a long way to go. So this is what I see now. In the back of my mind, I understand that this is occurring, right, on a lower time frame, because this is going to be absolutely valid structure on a lower time frame. So let's move into the weekly, and now you can see more information. Weekly is kind of ranging over here, but I can see that we're starting to sort of move down again, right? We have a high, low, lower high, lower low. We do have a valid bearish structure occurring. However, we're still inside this point of interest, so we may want to be careful, right? We could very well start shifting over here and continuing higher, so we don't want to be rushing anything. That's just some information that we can read within the weekly time frame. Let's move into the daily. And the daily tells us something a little bit different, right? What do we see? We see more clear structure. I can see that we had some swing point liquidity over here, right? The moment we traded below that, this turned into a swing point liquidity. At the time, this could have very well been a point of interest that you may have been watching. And as you can see, price sort of gives you some reactions away, but it never actually holds, right? We sort of retrace, hit a block over here, and continue lower, and that's fine. How many pips was this? This was still 150 pips. If you were watching on a lower time frame, you could have caught amazing buys, right? So we understand that we traded below a previous swing point liquidity. I also can see, if we look closely, that we just traded above this high barely, right? Meaning we broke that high, we took that swing high liquidity over here. Great. So I'm still not interested in drawing a structure play over here because I don't see anything of relevance, right? Let's actually move into a 12-hour, and the 12 hours sort of can give us more information. We look at this, and this is what I see, but because we have this high that actually trades higher, this is not a valid expectation, right? If this high over here was to be lower than this one, I would be absolutely bearish, expecting a leg down into a lower high and sort of continuing this way down, right? But that's not really what happened over here, so we don't want to be rushing into anything. Let's move into the 8-hour. What do we see within the 8-hour? 8-hour is clearly internally bearish, but externally bullish, right? Externally, we may be shifting, not confirmed yet, since we do not have the 4 structure points pointing in the same direction, right? Once we have that, we can clearly see that we're bullish. But so far, what we can see is that we're internally absolutely bearish, right? Creating bearish candlestick structure and moving lower. Great, I keep that as well in mind. Right now we move into our 4-hour, and this is for me and for my way of trading where things start to get interesting for me, right? So first thing I can see is that we're absolutely bullish externally, right? We have a break in market structure over here, and we can actually label that. Oops, that's not it. Over here, break of structure higher. And if I ask myself, where did that come from? Well, I can see a POI over here that I may want to be interested in watching. I have another POI right above it, but that's fine because this sort of covers that up. And I would be looking at this FU candle void, right? And we can see that we're hitting this area, so I may want to be zooming into lower time frames. However, before we do that, let's actually move into a 2-hour and let's see what's occurring. Well, I can clearly identify, and this is where you start playing with structure, is that we're externally potentially bullish, right? On a bullish run, we can denote that with this low over here and this high over here. And I want to make a note of that. I want to say to myself, external structure potentially shifting bullish. However, internal structure, and this is sort of your most recent trend, is absolutely bearish, right? We are bearish. So I want to keep that in mind. How do we know we're bearish? Well, let's take a look. We actually going to be labeling the external over here, the external over here. And once again, these are valid POIs for bullish plays because we're externally making a new high. And if we take our fib and we drag it from the bottom to the top, we can see that those POIs are well below the 62%, right over here. So these are actually discount prices within these particular leg up. So this is fine for me to look for buys. However, that doesn't mean that I'm going to be taking buys over here and expecting it to run new highs. No, and no. We need to be assessing more information, right? So let's continue. If we look at the internal structure, we can clearly see that we have a structure that looks something like this. Let me actually label it. Where is my tool? Right over here. We had this lower high, lower low, lower high, and we just made a new lower low, right? We can clearly see that this is our structure that we have at this point. So an expectation I could have, right, and this is where you start putting points of interest and structure together, is that we are going to be mitigating this block, which is going to provide us a retracement leg up to then continue lower. This is sort of my bias at this point, right? And where do I want to sell? Well, this is going to be pretty simple to see. Let's actually drag the fib from the top to the bottom. You want to ask yourself, right? You want to ask yourself this question: where did our most recent low come from? And you can clearly see that it came from this impulse over there, right? So this is our most recent structure within the 2-hour time frame. So I would actually go ahead and grab my fib from the lower high to the potential lower low that we're forming, and I would tell myself, cool, above the 62%, I want to be looking for sales because this is going to be discount pricing for me. So I would then look into a 1 hour, for example. I can see a very nice POI with some imbalances just below it. So that's going to be amazing. This would be a POI I would be watching. Absolutely. It doesn't mean that price is going to retrace all the way down there. I would love to see that, but I'm not sure it's going to happen, right? What else do I see? Well, I probably know that this is the last point of mitigation right over here. And I can go ahead and label that last point of true mitigation. I can maybe connect it with a rectangle over here. And I know that if we're going to continue down, we shouldn't be breaking above this FU candle over here. And those are going to be sort of my POIs for sales. I would then place this emoji over here for reference, right? So I know I would just want to be selling over here and I want to be selling over here. And I may potentially want to be buying over here, right? Because if we still look at the external structure, we just made a new high and the internal is going to shift bearish until the external pressure kicks back in, and then we may continue higher. However, I don't know. I'm not 100% sure that's going to happen. Hence why I'm just going to be waiting for confirmations and playing with what the structure may be telling me at a particular point in time. So we continue. We can now safely continue, right? So I would actually be at this point maybe looking at a 30-minute and trying to refine my points of interest, right? And if we look over here, we can clearly see that we have an FU candle right below it. So this is something that may want to get tapped before continuing lower. We can use something like this. And I would tell myself, hey, this is where we potentially want to tap before the retracement leg up into the sales, right? Because remember, my expectation at this point is that we could potentially tap into that, right? I don't know it's going to happen, but that's my bias. And I want a retracement leg into continued and really continued sales over there, right? This is sort of what I could be potentially expecting. However, I understand that price may not retrace as high and that my buys may just be short-lived and we could continue lower, right? Because what do we see? We do see some sort of breaker block occurring over here. So this may be an area of interest as well, right? However, that's below the 62% and we don't want to be breaking our own rules. So you want to be waiting for discount price and I wouldn't be monitoring that POI. But this one, absolutely. Let's actually see if we can zoom into a lower time frame. Hopefully we can. And what do we see at this point? We see we're hitting our point of interest. We see we have this is the low. We ask ourselves, where did this low come from? Well, this high over here, right? So this is our external shift occurring right here. And we denote that external shift. Let's see if we can get an internal shift, right? We understand that for an internal shift to occur, we need a 50% retracement from the high at least. So we are actually still above it, so there's no external shift occurring. Right now we're below it. If we were to be breaking above the high, again, you want to be safe, you can wait for this one, but I can see another sort of up, let me see, sort of up move before down move, right? That actually broke the internal structure over here, so that this may also be a valid point for an internal shift. However, we want more information. Let's see what occurs here. So we're still below it. There's still really nothing occurring, right? And we make a new low, and that's why you wait. You need to be patient. Nothing, nothing. Okay, okay. I don't know if this is news. Again, I don't really have all that information, but we're going to be working with what we have. What do we see at this point? Well, we see that we actually shifted, right? We respected the low, we shifted externally, we retraced down, we shifted internally. We have a valid shift, internal shift. So let's continue. I would now be sort of looking for points of interest to execute my buy positions, right? I would tell myself this is a point of interest. This is a point of interest. And once again, you want to sort of be splitting risk or really depending on how you want to do it. This would be something that I would be fine with. And where am I going to target? Well, my bias is a retracement like higher. So I may want to be targeting the breaker, but do not worry. I will have an entire video and section dedicated to risk management and trading plan. So that will be coming out soon. As you go through the videos, I will be releasing more content, but for now you need to be focusing on the information we have now, right? So we understand that, and I understand that we could also potentially come over here, and I want to keep my stop loss below the low, and we could then potentially continue into the breaker, right? So let's see what happens. Okay, so we never get actually tapped, at least not yet. Kind of very close over here, but no, that's technically not a tap. So let's see what occurs here. This is sort of, okay, this position got tapped in, and I think this got stopped out. Absolutely. So let's see what happens with this one. This one may not even get triggered. Let's actually see. I cannot make the candles print faster, but I think we may have missed this position, and this is fine, right? This is going to happen. So you can see if this would have hit, this would have been sort of a 30 pip move, not bad. Let's see how far it can go. But let's actually go back to a higher time frame because this is getting kind of messy, right? But once again, we're following structure, points of interest, liquidity story, and sort of trying to understand where we're externally, what we're externally doing, and what we are internally doing, which is sort of your most important reference point, because this is always going to be giving you the most recent price action structure and sort of what you want to be following. So we continue. Let's see. Okay, so we never actually make it into the breaker. This is now absolutely no valid, right? We can get rid of all those points over here. Our bias was not correct, and that's absolutely fine. Once again, you could have caught the bias over here. We've hit this FU, but we traded below, so that's also not of relevance. We can get rid of all this stuff over here. Let's continue following price. So what do we see now? Well, we made a new low over here. We retraced, and we broke structure again to the downside, so we can denote that with a break of structure down. And now I understand I can grab my fib once again, expecting this to be a low into a retracement, and I want to be sort of selling a discount pricing. However, we see the breaker imbalance here, so we want to be paying attention to that. However, let's actually not rush. And as you can see, we're actually going to keep our bullish fib over here, and we're going to be assessing liquidity because this is important as well, and we're going to be assessing liquidity at this point. So if we look at sort of a higher time frame, what do we see in regards to liquidity? Well, I can clearly see that liquidity is being built up over here at the top. We did have some internal liquidity that got taken out over here. Let's move into a slightly lower time frame, and we can see that we've taken a bunch of swing low liquidity, right? That has been taken. However, internally, we're still absolutely bearish, so there's no need for me to believe that we're going to be moving higher unless we start to trading into those discount external structure that then can lead into higher time frame bullish structure. So we continue over here. Well, I would be absolutely okay with selling over here if price was to come up here, right? But once again, you would need confirmation. You don't want to be blindly doing that. Let's look into a 45 minute. We can sort of see a breaker over here that should have stopped price from continuing higher, from continuing lower, but never did. So this becomes your breaker. However, that's well below the 50%. So you don't want to be really aiming for that, in my opinion. So let's continue playing price. What do we do? What do we see? Okay, we're now tapping into our point of interest, right? However, this point of interest is huge. If we look over here, this is a 20 pip zone, 27. So I may want to refine it, and I may want to be including wicks, something like this. This would be much better. So if we look into lower time frames, right here, we may have missed the buys. Again, there is buys to be made here, but I didn't have the ability to rewind, so we're just going to be sort of going through it, right? We can see We initially tap over here, right? However, this is sort of very messy price action at 8 p.m. So not much going on. I wouldn't be looking at the charts at that time. However, over here, this is Asia session. Let's actually see what occurs. We come over here, we break external structure at this point, right? We're sort of following price and doing analysis, nothing special here. We retrace, however, let's see if this was a valid retracement. And as we can see, yeah, it goes well below. So at this point, once we break the high again over here, you could have said to yourself that your entry protocol is fulfilled, and you could have used the breaker, for example, right? This is an example where the breaker would have been a phenomenal point of interest to watch out for. Reason being is because you can very well see the imbalances as we broke above this structure point. So you can expect that price can return into the breaker and continue higher, right? And it doesn't have to go over here. It doesn't have to go over here, even though it could have very well done that. However, we can see that we broke with impulse, with imbalances. So this would have so this would have been an actual phenomenal POI and something that I would have been looking at. You could do something like this, and you could put your stop loss below the breaker. However, this is sort of risky stuff, so you want to be doing that whenever you have clear evidence that you're going to be correct, right? So this would have actually been a phenomenal trade from this higher time frame point of interest, right? However, we missed it. That's fine. Let's go back higher, and we can see over here that we have another break of structure to the downside, right? So this becomes no, I mean, it's still valid, but it's too far away, so I wouldn't be paying attention to that, right? I would be most interested in looking at sort of recent price action, right? We can see that we had all this trend and liquidity over here that got taken out. We actually broke structure, internal structure, right? Remember, we're tracking the internal bearish structure over here, break of structure down. So I asked myself, where did that low come from? Sort of over here, but this high is higher, so I may want to be using that as my origin, right? I drag it over here and place it to the bottom, and I know that POIs well above the 62% are going to be phenomenal for sales, right? I understand that. So let's actually do that. We can potentially, again, this is pretty messy, so I would actually wanna, oh, this is nice. We can see a pretty clean POI over here, right? We can see a pretty clean POI. We see the imbalances right below it. So this gives us more confidence in this POI. So an expectation for me at this point is something like this, right? Even though we're hitting this higher time frame origin block, right? If we scroll left, we can potentially see it, but I understand that there's still lower areas within this order block that may want to be tested. Plus, I understand that if we look at the 3 hour, at the 4 hour, we can see that we're absolutely bearish, meaning we're constantly making lower highs and lower lows, and there's no reason for me to believe that we're now going to be going all the way up, right? I can expect mitigations over here, but that doesn't mean that we're now going to be going all the way up. So let's actually continue following price. I think we were looking at a 7-minute time frame. Yes, we were. So let's continue replaying price. And we want to be sort of looking at liquidity once again, right? So let's see if we actually get a tap. Perfect. We're now in a point of interest, and let's get rid of the red lines because we want to make this as clear as possible. So guys, what do we see at this point? Well, we see pretty, let me get rid of this. We see pretty messy price action on the way up, right? However, we understand that we're now internally bullish on this particular 7-minute time frame, but we understand that we're bullish on this time frame because we're looking to get into this area to then continue bearish. That is our expectation at this point. So you want to be assessing order flow as we trade into a point of interest, right? We can also see that we've filled imbalances on the way up, so that's good to have. We've taken swing high liquidity and sort of resistance double top, right? Liquidity on the way up, so that's also great for us. Now we have even more reasons to believe that we could start dropping over here. So let's actually zoom into an even lower time frame. Hopefully I can do that. 2 minute, maybe 1 minute, please. Yes, we can do that. So this is sort of where it gets confusing, right? Because if you ask yourself, well, what move made this high? You could argue this one right here, but this is not a real retracement. So I may actually be waiting for a low over here, for example. However, I still want to be assessing order flow because as we can see, we're starting to move down a little with some strength. So let's see what actually goes on and happens over here. Let's play price. And as you can see, we sort of failed to break above this high, right? So now if we were to break below this low, I would consider this as an external structure point, right? So let's see what happens. We want to give it time. We don't want to be rushing. Okay, so this is something of interest. We can see over here that we break external structure right there. So external structure. So now I may want to wait for an internal structure to break. So let's see what we do. Let's see if we ever come back. Once again, you need to have some patience, guys. Your POI plays may take some time, but at this point, I would actually be looking for a entry protocol at this area right here, because this is sort of the origin that broke the external structure over here, that actually broke the internal structure over here. I didn't see that, and that's fine. Internal structure. So now I understand that we're retracing and we could potentially see sell-offs over here into lower prices. So let me actually see what happens over here. And now we're going to be addressing an issue you may have, right? If you see that you have the external and internal structure, but price, let's say, moves too far away and you're not sure about your point of interest where you want to execute on, what you can do, and what I suggest you do, is actually wait for one more break, for one more external break at your point of interest that you would have normally executed on, right? Once you have your external structure break, your internal structure break, if price then plays in and around this area for too long or goes too far and then returns, you want to be assessing order flow and not taking the risk entry just as it is, right? You want to be at least waiting for one more break. And this is a tip that I give you here that I use whenever I see that price may have sort of played around and away for too long. So we continue. Let's actually see if we can catch an entry over here. Okay, this is absolutely valid at this point. We can see that we had our protocol fulfilled. However, we were not sure because price went too far away and then retraced, right? So we assessed order flow and we can clearly see that we sort of came here, made a higher low, moved higher, sort of manipulated highs, right? This is something you want to be watching out for. We can see that we have some highs. Those got taken out over here. We move lower. Now people are starting to get into more sells. However, we move up, we take the highs once again, and now we see the shift in momentum, right? Now we can clearly see that we're shifting momentum. So at this point, I would be absolutely happy with taking a sell over here, right? I would be happy saying to myself that, hey, we have a order block over here that is part of this mitigation play, that is part of this external and internal shift that has just now been confirmed for me, and I am happy with the risk. I would take a sell over here, put my stop loss above the high once again. You want to do that, and do not worry about targets. That's going to be sort of discussed in the next section. But since you're overall bearish, there's no reason for you to believe that we cannot get down here. However, that may be excessive, and you may sort of be looking at a, let's say, 30 pip target, something like that, right? 1 to 10. So let's actually see how this plays out. Again, I'm not sure. Let's move into a slightly higher time frame, maybe even a 15-minute, and let's see what occurs over here. So we get tapped and we move lower. Once again, this is expected. Reason being is because we are at the lower high. Right over here, heavy discount pricing. We just made a low. We're retracement. We're internally absolutely bearish, and we don't have evidence that this external point over here is going to provide you with the huge moves up, right? We already mitigated some orders. So even if we were to move higher, we're probably going to get a return into some area over here to close some positions out to then continue higher, right? So that is something that is in the back of my mind. Let's actually see what's happening over here. Move into a slightly higher, and let's see what occurs. Well, as you can see, price moves all the way down. And that's because you're tracking, once again, let's go slightly higher. You're following the internal structure trend, which is telling you clearly bearish. You understand your external structure points, which can potentially be telling you bullish. But once again, we don't have sort of proof that that is going to occur until we start breaking above previous lower high points, which we're still not doing over here, right? We're still respecting those lower highs, so there's no reason to believe that we're sort of going to be changing directions at this point. So this is pretty much how you go through a chart, right? And let me actually give you some more help over here. You want to be doing that where you start in the monthly, weekly, daily. You want to be assessing what those are telling you. However, there's no reason for you to start framing POIs at those time frames, right? If you don't want to use those. But for me, I just get some information over here and I move on into the 8-hour, 4-hour, right? 2-hour, and this is where I track my internal and external structure, and this is important. Track internal and external structure. This is sort of what you want to be doing. Once you understand that, you can play with the external just as we do over here. We understand liquidity over here. We understand liquidity on top. We track internal structure as we go down and we mitigate orders. And we need to keep in mind that, hey, we are in potentially heavy discount buy pricing as we trade back into this origin over here. However, I never want to blindly buy a origin or sell a origin. You want to be assessing order flow as you trade into your point of interest, and you want to understand that every POI mitigation is going to look a little bit different, hence why we use a particular protocol, which is the external and internal shift, which is going to prevent you from bad trades. It's going to keep you away from bad positions, and it may potentially keep you away from good positions at sometimes if you're waiting for your protocol and your protocol never gets filled, right? Maybe we have this POI over here, your protocol never gets filled, and what actually happens is that it shifts externally, never retraces 50% and continues higher, and you've missed the trade. But that's absolutely fine because you've created a system for yourself that actually will make money as long as you follow it with no emotions at all, right? And emotions is something that I really want to touch upon in future videos as well. So expect some information around that topic, because it doesn't really matter the system that you have and how good it may be if your emotions and decisions are not sort of coming from a logical standpoint. At most times you're still going to fail. So you want to keep your emotions in check at all times, right? So I really hope you guys found some information inside this video. Hope this was useful, and I will see you guys very soon with future videos and potentially future sections. So I hope that so far every information you'd learn was useful to you. Practice, 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 which is something that I want to talk as well within a future section. But backtest, put the pieces together, go through your charts, get used to recognizing points of interest, structure plays, and mitigation plays. You want to be doing all that stuff, right? So until next video, guys, I wish you good and profitable trading. I see you soon.